Okay, video 3 of 3. We start with Pfizer. They used to say Pfizer is where money went to die. It looks like it's the truth. Look at this P&L. Oh my gosh. I wouldn't say it's cyclical because that's 5 quarters. So that's a year and a quarter. So it's not like it's, oh yeah, during the September area. You know what this pandemic did and how they shoved people's vaccine in people's faces? They created never vaxxers. So people that say, I will never take another vaccine in my entire life again. How will that trade? I don't know. I'm asking. So what am I saying? Fundamentally, this may not be the same company as before. May. I don't know enough. So do your homework on the company, prospects, and the drugs it has. I'm pretty sure it's old enough that it has a pipeline of other drugs. Just make sure you know what they are. Technically, anything around 30 should be an easy long entry from history. Okay, you see this is the pandemic flash low. This was an area well contested before anything about the pandemic from 2017, So this box down here should have buyers everywhere. So if I'm long Pfizer, this is not where I would exit just based on the chart. Do your homework on the company. If I'm looking to get long and I nibble part 1 of 2 or 3, okay. So if I wanted to own 100 shares, and I would only own 30 tops, because if it does get down to 30, I might add another batch. Just saying. Okay, that's Pfizer. Palantir. So I'm long, and I sold $12 puts, and they made money. They delivered most of their profits, and now I can sell them again. I don't mind owning shares at 12. So how it works is I sell puts at 12, and somebody might decide to give me their shares at 12, and I would break even at 11.2 or whatever it is. Depends on how much I collect for those puts. So I basically would end up selling somebody insurance on their shares. The company is fine. The P&L is good. It's not outstanding P&L, but if their business is growing, they do business with the government and with private sector. Technically, if you lose 13.6, you might end up at 9, but a lot of resistance and support. A lot of support in between. So I'm short. I would be okay shorting $12 puts in Palantir. I have not added to the position. I did close some. I did not add. Philip Morris, stuck in the middle, buyers below, seller above. I don't know what to do. So if it loses 93, I tell you it's going to go to 89. And if they take out 98 and change, they could get to 102. If you bet one way or another, you're simply guessing. So make sure you do your homework on the cyclical aspect of this chart. And if you go long into this, you're doing the right thing, but put a stop so you don't ride it all the way to here. If you go short into this, you're doing the right thing. Put a stop so you don't get pummeled. Wow, what is this? Whoa, that's a big dip and immediately rejected. So now what do we know? We know we have strong buyers below 44. Any entry point at or below 44 is a smart thing to do. And so it makes it easier to get to 45. Is this a tick right there at 45? Look at, there's a green dot right there. So mark 45 versus 44. That's your battle right here. Pioneer Natural Resources, PXD. Again, energy company. The weekly, I should say. Let's go to the daily. The daily stock chart. Look, I said vulnerable and I drew an arrow, and this is where it's at. There should be support inside this zone of 223 to 218. Okay, so any strength here, I treat it like it's going to curl back down and come back to 218. Because target 2 on this red W is like 208. They don't always fill target 2, but it's there. So use rallies to exit, not to load up. If you get long here, yes, but trade it, don't invest in it. Well, I shouldn't say that. It's a better trade than an investment. You can invest in whatever you want. PayPal. For a minute, PayPal was bucking the trend. It delivered exactly what we thought it would do. Look at it. You cannot draw a more perfect chart than this. The trades I sent won. If you didn't book them, you can retake them. You're still okay, but you can retake another one now. The only problem is that now PayPal has the risk of catching up to its sisters like Square, which went down like a stone. And now PayPal is threatening. If it loses 57, I think it goes to 52.5. So use rallies to get out of trouble, or close winners, or close slightly small losers. You don't want to be stuck in this one. When this one starts falling, it becomes like Square, a sinking ship. RIVN, I am totally out. I told everybody to get out that I told to get long. It made money. I don't believe in the company anymore. Look at this P&L. It's not getting any better. Management has to tell me they're going to spend less money. There is no way they're going to be spending $1 billion a quarter and still survive. At some point, they will need to raise equity. They cannot borrow anymore. Interest rates are higher. Amazon's going to not lend them. So they're going to issue equity and dilute the stock. So here's the trigger. If they lose 19.5, I think they go to 16, if not 15 or 14. So be careful. Okay. If you're looking to enter, if you're long and you're adding here, I think you're making a potential mistake. If you're looking to enter, I would take 1/3 of the position and add the next down here. I am no longer a believer in this company. Okay. A couple of my neighbors have them, and now I look at them and they don't look attractive. At first they were cool. Now they became dated really quickly somehow. I did see my second van of RIVN. Okay. Reload. I told you something going on with TradingView. Come on, give me the rest. We weren't here. We were at RIVN, Rocket Lab. Okay, I don't know much about Rocket Lab. Let's see here, 2 hours. Whatever, is this a mortgage company? If it is, woof, avoid. No, it isn't. Whatever happened here, you guys can tell me. It fell into a strong base. So anything below 4.2 is a strong buyer. A lot of sellers into 5, even more into 6. So if by some miracle you get back to 550, I would exit. You do have a strong buyer below. Schwab. We traded this one when it fell apart during the crisis, no crisis, the other day in March. I would not want to get involved with banks. My last trade on banks was DFS and I booked it. I don't want anything to do with banks. So I could tell you that if they don't get back to 56 or 57, I think they go to 47. If they don't get back to 56, this is possible. They need to get back up there. And how will they do it? Let's say they get back up. It is possible, but they will do this. Avoid, so use rallies to exit. Shopify, very interested for me to get long, but I'm not going to because I'm long Etsy and stupid Square. And they're about the same company. This is a good buying spot. If you lose 51, you'll probably go to 54. So if I'm long, I'm not adding. I will add down at 54, or 46, sorry, 46, 40. I will not, 44 and 46. I will not add here. But if I'm going long here, I should take a small bite and leave room to add later. Technically, we would be down here. So I would sell a put to own shares. In fact, I might do that. But I would need to close another one out. So I need, if I'm lucky enough to close one problem child, I will take this one. Wait. Earnings in 32 days. And they pre-announced several times. So don't sell anything into 2 weeks before the earnings. So I might skip it altogether. I just talked myself out of it. I don't know what that is. Smart sheet. Strong base. If you lose 39, you're in danger of going to 35, but a lot of support in between. So you can go long with a hard stop or partial long. Like you take half the shares, and if you fall down to here, you take the second half. How? I don't know if it's liquid enough to sell puts, buy calls, buy partial shares. Yep. SMCI, I believe we traded it well. This one could drift up to 250, provided you hold support. You have backup support. If you lose 228, you do have support scattered through to 212. But this is still a hideous head and shoulders like the stock market. So one can say you have a head and shoulders this way, that way, whichever you draw it, and this is the downside scenario. So this is potentially happening like the stock market. So rallies, respect the rallies and book profits quickly, because they might do this and trigger this one to finish this job. Okay. Rodrigo, I'm already live. What do you mean? Okay. Let's speed up. Snow. Snowflake. I would get long into support if I need it. Decent P&L, but the support zone is wide, so it's going to be tricky. Credit put spread, I believe did I share one? For some reason, I think I talked about one this week. I would sell a credit put spread. 70 days on the clock almost for the next earnings report. I thought that we could dip, and we did. So support zone and a backup support zone, I would sell a put spread for snow. If I'm long by calls and running out of time, I would fix it. Synopsys, is that who is? Yeah, Synopsys. It's one of those weird tech stocks that you need to study the company. From the P&L, looks pretty good. Any entry below 435 is a gift. And you don't have support here immediately. You have support lower. So if I'm long, I'm not adding. If I'm looking to get long, I'm not going all in. I'm not rushing in. They're selling rallies. They're probably going to be a better entry point below 436 or 35. SOFI, I'm not touching it yet. We made good money on it. I'm not going to break my record. I think if they don't get back to 8.1, I think they're going to end up at 6.7 or 7. So maybe down here I will go long again, like before. I do have alerts. So plus, if I'm long anything that looks like SOFI, I shouldn't add. I don't trade this. Hopefully you don't either. It's pretty illiquid in the options market. Now we do have, this is the stock market. Anything I said about the SPY applies here. So roll back to the first 5 minutes of this video, and it tells you that they're selling rallies, and we could be at 420 for 428. And we'd still be in the hands of the bulls. Look, inverse head and shoulder. This is exactly the SPY chart. Exactly. Spotify. I'm not long. I closed my longs. We won with it. I would sell puts in here to own shares. I would sell put spreads here to own, not to own shares, to trade it. It has a lot of sellers at 164. I would not hold calls. Okay, I would not hold calls. Available, yes, it's coming to fruition. It could be at 140, 145 in the next couple of months. So the way I would trade it is go out in time, sell a put spread, and just let time do the work for you. SPX, I started the day with the SPX, so I'm going to skip it. And I spent a lot of time on it, and I have another video coming up tonight. Square, I don't know what to say. I am in shock as to what happened here. I am short of 55.50, so my put spread is completely in the money. So I basically have resolved myself to owning shares at 55, and the expiration date is still out in time, so hopefully it has a miracle pop. Use the pop to get out, or roll the trade forward to buy you more time for it to recover. Personally, I'm going to take shares. So if I sold the 55.50, I think that's what I sold. Just let's assume it is. So I will wake up one day owning a $55 share, but the 50 put has brought me profits. And if I sell it, the 50 put, it brings down my break-even point, and then I'll hold my shares and sell covered calls. Now that becomes a complicated trade with potential more downside. The easy one is to take the loss and say, if I wake up and they assign me shares at 55, I make a call to my broker and I say, Sell my shares at 50 because I own a put there. So you exercise a right to take the maximum loss by design, not a penny more. This is crazy stuff. The company is outstanding. The P&L is solid. I don't understand why it's sinking like a stone, until we got a caveat that maybe it's sinking because the conversation now in the news is that mom and pop stores are going out of business. If that's the case, that's who uses Square, mom and pop stores. But if I look left, I have the pandemic low here. You're going to tell me that this company is doing worse now or just as bad as the pandemic low? I don't buy it. So it will find support somewhere. Unfortunately, it's a sinking stone right now. If you need help specifically in your scenario, I'm going to try to put out a video this week for that. Symbolic, I don't know what they do. Technically, they're falling into a support zone between 30 and 25 and 24. So use that information to trade, to manage your risk. It could be at 37 or 36 in the next couple of weeks. I would use that to get out. 38 sellers are hard. AT&T, pretty good action, and it does pay a lot of dividends, and this P&L is crazy. So if you own it for a dividend play, nothing to do. If you entered it on my note here, and I said enter Verizon or AT&T, there's definitely nothing to do. That was a golden opportunity. Remember, I jumped on it right away. Tesla. Tesla is the only way I would trade it last week is by, somebody asked me and I said, okay, let me show. This is what I would have done. It had 15, so now it's got 13 days on the clock. And that immediately brought profits, and it's probably still a statistically viable trade. That's the only way I would go long Tesla right here, by selling a put spread. Because if we don't get back to 252, I think it drifts lower. It does have a lot of support. Anything below here is support. This was a breakout, so there should be support, but it's loosey-goosey. So it could be $10 worth of support. Tesla moves $10 a day every day. TEVA, not an obvious entry point. Definitely not an obvious entry point. It could be at 9.6 or $9 in the next 2 months, a month. At the risk of missing out. Target, I've been eyeing it to take longs, and it just cannot find a floor. So the closer it gets to 100, the easier a decision for me to go long. So I will sell a put spread or a naked put. Now, it will move tomorrow off of Costco, Target, Costco, retailers. I'm watching it. If I'm long Target and I haven't gotten out, I wouldn't get out here. But if I'm looking to go long Target, I would decide this week whether I want to or not. And the way I would do it is sell a put spread way out in time so I don't have to fight with it. Okay, Target. TQQQ. I'm not going to talk much about it because it's basically the SPX, SPY, and the QQQ. You will have that video tonight. Basically, we need a pop, or we're going to go another 5% in the market lower, which in this case would be 15%. I don't know what this is. It looks like it's bottoming, whatever this is, and stop out if we get a new low. If you get a new low, it's going to 15. Until then, you could issue a trade long based on the base and then say, okay, stop out immediately if we go lower, like a decent P&L. Telos, I think that's a cell phone overseas, right? Maybe not. Uber, yeah, it is what it is. I mean, the company has so much potential, but I don't know if they're still talking. This is not an obvious entry point for me. I would not be interested in Uber above $40. It has support at 42, I have no doubt. It has support at 40 to 38, and it has much better support below 36. Yeah, I was right, telecom. Okay, so I think somewhere around 35 would be my entry point, but definitely my entry point will have to be at 38 or lower. If it takes out the high it just made, it goes to 54, but that's a big if. UNG, we already talked about it. This is the natural gas futures, so I would be long the UNG on dips and stop out. This is a crazy industry with crazy stock price action. We did really well with it. I would sell put spreads and own call spreads. What does that mean? I would sell a credit put spread to buy a debit call spread and close the credit call spreads on spikes. UNH, I wouldn't touch it up here. This is where it failed hard before. The bulls have momentum in a bad market, so that's a lot of strength. So I wouldn't go long into this. I would go long if it breaks out of 516 on a closing basis, or buy the next dip into 490, 492 to go long again. So if you want the breakout, I think you should buy the next dip and to take this out. And if it breaks out, buy it on this dip. Don't buy it here. Buy it on the next day or two. Visa. Okay, now it's better. My fear is that MasterCard is still too high, but Visa has a good buyer into 228. I wouldn't mind going a credit put spread on Visa. Verizon, everything I said about AT&T applies to Verizon. If you got long on my note here, you're still positive on the stock and it's paying you 7 or 8% in dividends. Has a lot of support, so it could creep back up to 34.50 or 5. If by some miracle they go above 35.2, they go to 36 or 37. But the reason why you own the stock is over time it just pays 7% dividend, which, by the way, is becoming less and less attractive. Interest rates skyrocketed last week, so careful. WBA, I wouldn't touch it. I honestly wouldn't. It's just too new, no bottom to it. I wouldn't touch it. WBD, I wouldn't touch it. But at least this one has a bottom, and it's right here on the left. So you can say, I'm going long against the $10 mark, and and then that becomes your base. And then you deal with that. It's like a SPAC. And exit on spikes. Workday, not an obvious entry point. You could find bounces, but I think it could drift down to 215. Okay, how? Just like the curl. So if the rallies come, they may do this. So be careful. Respect the curl. Wheat, don't know much about it. Looks like an all-time low. No. Okay, so you do have support below. It's just so old that you're going to have to go on faith. So here's how I would trade it. I would take a long and stop out if we go below 5.6. Take a long and stop out if we go 5.6 or lower. Walmart, not for me. Lower highs, lower lows. It might be at 161, 160. Sellers at 164. Exxon, we've talked about oil companies. This is a bounce area, but I think it has sellers at 118. So here's a realistic scenario. If it bounces here, it might do this and that would be a better entry point. So down here, it would be more attractive. I'm long the stock and suffering. I believe I sold a 1750 put or 15. I can't remember. So basically, I would be owning shares here and breaking even at 16 point something. I'm okay with that. Me being down $50 per share for a long-term investment. The P&L is good. It's just suffering like you wouldn't believe with all the all those small tech companies are falling off a cliff. Okay, so last minute UPS. UPS is in a support zone. I do have a credit put spread. It is underwater and I will need to deal with it. Luckily, I think I have 2 weeks to deal with it, so I will issue a video on what to do with that. Lower highs, lower lows with no end in sight. It's one of those stocks that have caught the meme. Everybody now knows for a fact that UPS sucks because it has labor problems. So where is the incremental seller going to come from? The closer you get to 150 and 148, the fewer sellers that are available. So big gap below. Not every gap fills, but when you see it down there, you have to be open to the fact that they might be going for it. Crazy or not, that was a crazy rally, so I might have to take a loss on this one. That would be 2 stocks this year I take a loss on. Ooh, 2 of them. Yikes. JP Morgan was the other one. And okay, so I will deal with UPS this week. All right, folks, I got to go. We will stop the recording.